Congratulations! You found the Santu Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for Sunday, May 10th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 0.99 to 0.98. declining further into very slightly bearish territory. The total count of securities in bullish or bearish patterns fell 2% to 2,941. The count of bearish stocks decreased 1%, while the count of stocks in bullish patterns decreased 3%. The Santu Pirls PNF Market Breadth Summary chart shows us a market now 2 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, clicking Register, and following the prompts. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 136 points for the 6th decline in 14 weeks. At a negative 33.12 points, it continues below all 9 tops above plus 100 and above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's market gauge volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. At Friday 5/1 close, the CCI 20 gave a zero-line reject long entry signal. At Tuesday 5/5 close, it dropped below the zero-line reject pivot, signaling the trade exit. The result of this trade simulation was a loss of 61.65 points on the Nasdaq, or $1.74 per share of QQQ. The CCI 20 daily had 3 consecutive days below zero before ending the week at plus 50. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 42 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly continues in a Woody's uptrend and at plus 68.61 remains outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive and all of the bottom 5 are negative. Bullish, computer hardware has left the bottom 5. Oil has left the top 5. Bearish, oil services, and gold and silver continue in the top 5. REITs and disk drives continue in the bottom 5. Comp Tech has left the top 5. Focus this week from Electronic Research Interchange via www.zerohedge.com. Russell Napier explains what's in store for gold if cash is outlawed. Thinking through the implications of a cash-unfriendly deflationary environment, Mr. Napier makes the following critical observations. Any move to restrict access to central bank liabilities and enforce the holding of commercial bank liabilities is likely to lead to a premium of one over the other. Given the capital risk and lower yield on bank money, Gresham's law is likely to see banknotes becoming a store of value, while people seek to use the inferior bank deposit as a means of transaction. QE cannot force the price of government debt securities much higher and yields much lower, as increasingly banknotes and even bank deposits become attractive to investors compared to government debt. A limit to QE is a big story. This would be a world of deflation where the scale of negative nominal rates would have a floor. Indeed, bond yields could overshoot into negative territory and then rise into a deflation as the limits to negative nominal yields become increasingly clear. Thus, the recent rise in the yields of Euroland government securities may not be a signal of inflation at all, but rather a realization that we have reached the arbitrage limits of how far yields can fall. Historically, the shift from deposits to banknotes was associated with the fear of commercial bank insolvency or illiquidity. That was called a bank run. Today, a bank run is the natural consequence of forcing too much central bank liquidity onto a system which simply does not want them. A banker does not want to accept this short-term funding if he cannot lend the proceeds at a profit. The only way for the banking system in aggregate to repel such funding is to offer interest rates on deposits which force investors into banknotes. If banknotes are outlawed, you will be forced to hold money that is a liability of a commercial bank and refused access to money that is the liability of the central bank. Any such ban would have to be a decision of government and not of the central bank. In the J.P. Morgan Chase annual report, President and CEO Jamie Dimon warned that banks are having to turn away even USD deposits. This analyst has now spoken with 3 investment managers who have been asked to close their deposit accounts with JPM. In such a world, zero-yielding gold would be a high-yielding instrument. If the authorities ever sought to restrict access to banknotes, then gold would suddenly find itself enfranchised as money for the first time in many decades. So, given the scale of these competing forces, it is just too early to say what might happen to the gold price. But the failure of gold will grow the more it becomes clear that central bank fiat has failed and the age of government fiat is dawning. The time is ever nearer when the price of gold will rise in an era of deflation. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Ratio Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you've had the opportunity to spend some time with mom, or if you're a mom, spend some time with your children. Also hoping that you're looking forward to a great week coming up, and wishing you true success.